ICICI ETF and CNBC-TV18 present Smartly Passive, Unlocking the World of ETFs.
Hello and welcome to this very special episode of ICICI ETF and CNBC-TV18 presents Smartly Passive, Unlocking the World of ETFs, where we'll celebrate the power of women in investing. Today, we are diving into the world of exchange-traded funds and how they can be a game changer for women looking to build wealth and secure their financial future with valuable insights and pro tips from industry experts. Whether you're a seasoned investor or just starting out, this episode will empower you with the knowledge you need to navigate the ETF landscape confidently. And for this masterclass, we have with us today two very special guests with us in the studio. Kavitha Menon, founder of Probitus Wealth. She's a SEBI-registered investment advisor. We also have Tanvi Kanchan, the head strategy at Anand, Rathi Shares and Stockbrokers. And we all are invites today. And it's an all-women panel. So very happy to have both of you in the studio today. Thank you so much for joining in. And we have been talking about in this series the smartly passive, and we are trying to unlock the world of ETFs. We've discussed a lot, but we have not discussed what it means for women investors. They are gradually increasing, and it's good to see that number as well. Kavitha, let me start with you first up. Can you explain, let's start with the basics, right? What are ETFs? How do they differ from mutual funds and other asset classes? Just to talk about the basics first.
So ETF is really a basket of securities which are traded on the market. So if I had to put it very simply so that everyone understands, it's basically a mutual fund combined with a stock, and you mix that and you have an ETF. Okay, so it's listed in the stock market. You can buy it and you can sell it, trade in it like any other stock, but it's a basket. It represents a basket of securities. Now, these securities could be as diverse as it could be stocks, you could have bonds, you could have commodities. So it's a diverse mix of asset classes that you can choose to invest in via ETFs.
Okay, all right. So that explains the basics. Now let's come and talk about the specific advantages that we have. And since I said it's all women panel, we are discussing what it would mean for women as well. What are some of the specific advantages you think ETF as an asset class in a women's portfolio be? What does it add to their overall returns?
Absolutely. I think as Kavitha very rightly pointed out, it's a basket of investments. So you can have your stock portfolio, you can have a debt portfolio, you can add commodities, you can have international mix. So it's a mix of varied asset classes that you can have. Now, for example, you see the stock markets go up or down. You see Nifty has gone up, Nifty has gone down. But to have individual stock holding of that particular indices may not be favorable, or you can't really track the exact indice. So one of the main advantages that it gives you is, by a passive way of investing, you get a certain portion of that particular index as an allocation in your portfolio. I believe that's one of the major advantages that it has, where you get a good allocation of a specific index of your choosing as a very good portfolio allocation. Secondly, ETFs also somewhere, because you mentioned mutual funds, they offer a lower cost in terms of your expense ratio in comparison to most of the active mutual funds or even index funds. So that gives a very big advantage when you're holding the portfolios for a longer period of time.
Okay. Your take on this same question, Kavitha.
So, traditionally, women in India invest in gold.
Yeah.
Right? We go to the friendly neighborhood jeweler and we buy gold, and we pay a very heavy price in making charges. There's a difference in the price. Buy, sell, quotes are different, widely different. Every buying and selling is a 10% loss in the value of your gold, right? Now, imagine doing the same thing. So women love to save by buying gold. If you could do this very effectively and efficiently and in a much easier fashion, you could just simply buy gold ETFs. And these are listed in the market. And you can buy small, tiny portions, save that way and accumulate gold, right? Imagine a family which is trying to save gold for their daughter's marriage. Gold ETFs become a very efficient way to buy gold and store, and you don't have to store it, you don't have to look for a locker. You're buying it at the price in the market, you're buying it at the correct price. Liquidity is available. So look at the advantage.
Yeah. So they like the asset, and that is a great way to take exposure. And after the recent budget changes, ETFs, gold ETFs become more attractive, right? Yes. Tax efficient as well. So, you spoke about gold ETFs. Let me come to you. What are some of the ways, or I would say some of the strategies you would recommend how women can take exposure to ETFs and can have them in the portfolio?
Absolutely. So gold ETF is one of the very big pluses, I would say. If you track like a 1-year returns, I think gold ETF on an average have given you like a 29-31% returns in just 1-year period, which is extremely good. As she very rightly pointed out, you have a lot of tracking error when it comes to physical holding. But when it comes to gold ETF, your tracking error, that is as closely, minutely, it kind of mimics the benchmark, is very low. Along with that, what you need to understand is your broader level, what is a kind of risk profile, what is your kind of tenure. Basis that, you can create a very good strategic allocation in your portfolio. Nifty 50 in the last 1 year generated about 33-odd%. Mid cap, which is a far more volatile index, gave you at about 41. Then you have your small cap, which was in the range of 59 to 60%. Micro cap furthermore. So basis your risk allocation, basis the tenure at which you're investing, you can have a very good strategic allocation just in these broader level indices. So you can have a very good 60% allocation into just purely large cap, that's your Nifty 50 ETF. Go a bit higher on the mid and small cap, that kind of gives you a good alpha generation capabilities in your portfolio. When the markets are really rallying, you create a very good alpha in your portfolio. The large cap kind of, sustains or gives a good hedge. You can add gold in your portfolio because recently gold has also appreciated fairly. So gold can be a very good hedge against inflation, against any kind of volatility that you're witnessing in the market. So gold adds that hedge in the portfolio. So you can create your own.
Yes, of course. Please go ahead.
So besides gold and equities, which is the more popular ETFs, you have debt ETFs also. We're completely ignored, but they are significantly important in asset allocation, and you have such lovely, products in the debt ETF space also, right from Bharat bonds to gilt ETFs. Right, so even these can become a very important part of your asset allocation. If you want to do some kind of, parking of money, you can use liquid Bs, as liquid as they come. So that's also one of the ways in which you can store value if you want to hedge against equity risk.
Makes sense. So, you spoke about how people don't look at debt ETF, but otherwise, Tanvi, tell me, what are some of the other misconceptions people have about ETFs? And you think, how can they be dispelled? Because people are still warming up to passive investing, and especially ETFs.
Absolutely. I think you saw the rise in ETF. It was launched, I think the first fund was launched in Jan 2002. Since the last 2 decades, you've seen people getting more mature. You have seen people kind of taking ETF as an actual allocation in their portfolio. One of the major myths is that ETFs are more expensive, that they're illiquid in nature, which is not the case. They are highly liquid. You go on an exchange, it mimics exactly the kind of indice or the sector theme that you choose, and you kind of get that entire portfolio allocation. You buy and sell on the same day itself if you want to. So that's the kind of liquidity most of these ETFs with very good AUMs have. Another part is also on the cost. A lot of people think that holding an ETF is more expensive than, say, holding a mutual fund. That's why you've seen increased allocation in mutual funds, relatively lower inflows in ETF. That's one of the main factors that people think. It's this whole complication behind ETF, and I think it's very important to uncomplicate all of those matters, where A, it's very liquid in nature, you buy and sell on an exchange, B, they don't really have that heavy duty transaction fees or expenses that people perceive that they have.
Exactly why we're having this conversation, to dispel those myths. Anything you want to add here? Yes.
So in India, ETFs typically are passive in nature. However, there are active funds also in ETF space in developed markets. So when people think of passive, there is a feeling that passive means no movement. It just stays and nothing happens. And when you buy those, let's say a portfolio of those 20 or 50 Nifty, and that's where it sits, nothing else happens to it. Passive doesn't really mean that. The funds that they mimic, the indexes that they mimic, do go through rebalancing, on various factors, which means that your portfolio does get rebalanced and you don't pay taxes. Every time that rebalancing happens, you are free of any kind of tax implication or cost implication, which also means that your portfolio, because it's getting rebalanced, the better quality companies do come into the portfolio. To give an example, a Nifty 50 in 2005 is maybe not similar to Nifty
Yeah,
today.
of course.
Right. In 2024, maybe 20% of those stocks are there today.
Correct.
So in that sense, when you have passives, they are getting rebalanced. So this is the biggest myth I've seen in passives. That passive means actually nothing.
It's the strategy of the fund manager. It's got nothing to do with the movement or the returns on the stocks. They still move or give returns the way they are supposed to be, basis their performance. Definitely
In
like
fact,
that point.
The Nifty 50 also rebalances every 6 months.
Correct.
So,
Yeah. Of course, they just think only 2 stocks, 3 stocks are getting changed, while in actives, there are more changes that they see. So, of course, that's a myth that needs to be dispelled as well. So, let me come back to you, because we've spoken about how gold ETFs can be a great addition to a portfolio, debt ETFs can be a great. Now, to a very specific question that we get from women a lot. Now, when I'm constructing a portfolio and this active versus passive debate, how can ETFs be used to diversify their investment portfolios? How much should be allocated there? There cannot be a single number for everyone, but still, how do we go about it?
So when you start building a portfolio, you build from the base. Get your foundation right. And to get the foundation right, you start with the simplest product. The simplest product is Nifty 50 or the Sensex, because one understands it better. When people talk about the market, they're talking about the Nifty or the Sensex, right? Start from there. Start from the basic. Then build on more broader indices. Maybe you go to smart beta funds. Maybe you go to sectors. Maybe you go to market caps, which are, at the lower end of the market capitalization. So that's later. Start from the basic. Build it up. As you get comfortable, that becomes your core portfolio. And then you start building strategically, whether you want to go for active or passive. But the base of your portfolio, the absolute strength of your portfolio should be the largest companies in India.
And they would represent the economy or the way...
They are bellwether stocks. So start there.
Okay. Anything you want to add here?
No, I completely agree. Start small, start in a way that even if there is volatility in the market, you're not completely overexposed on that front. Because your start is where you kind of understand your risk tolerance. You understand, if tomorrow you hear something like Sensex coming down 15, 20%, how much of that impact has on your total overall portfolio. I think one of the main things that people need to be aware of, that if the markets are down 10%, 20%, 30%, their portfolio should not be down the same percentage as the market. So what she very rightly mentioned earlier, debt ETF, gold ETF, these are broader level assets that kind of build and have a different varied level of volatility amongst them. So along with a large cap like a Nifty ETF, add a bond like a debt ETF, add some portion into gold ETF, diversify in your already diversified ETF. That kind of gives you a broader good allocation also, because debt, we are looking at different cycle changes now, interest rate reduction, things like that. You can benefit out of that. Gold is always a positive whenever there is geopolitical crisis, so that becomes a very good hedge. Plus equity gives you an alpha. So, you can build it up that way. So that becomes a very good strategic allocation.
And gives you a cushion as well, as you said, in volatile times, which is very important. It's a very interesting chat, ladies, but we have to get into a quick commercial break. You stay tuned and we'll come back with more insights on the show today.
ICICI ETF and CNBC-TV18 present Smartly Passive, unlocking the world of ETFs.
Welcome back to this special episode of ICICI ETF and CNBC-TV18 presents Smartly Passive, Unlocking the World of ETFs. And we have Kavitha and Tanvi in the studios with us. It's been a very interesting chat. This is an all-ladies brigade and we are discussing everything that you need to know about investing in ETFs. Let me come to you first up, Tanvi. What is the advice that is something that you would give to women who are maybe feeling reluctant to start their journey with ETFs? Or in general, right, they may be thinking that maybe gold is a better bet. Why do I go the other way? What would you suggest?
Absolutely. The allocation that women, this is a data that AMFI releases, a broader level composition of men versus women invested in broader mutual fund, ETF, managed funds. And women just hold about 27%, which again, is a very gradual shift that we have seen over the last decade. 27% is a huge number that they hold, but I feel there's a very big myth, which is what we are sitting here and trying to demystify it, where they feel that these are more complicated structures. Why do we want to get into it? Gold is easy, FD is easy, or just keeping it in cash is easy. one other thing that happens is inflation eats up your portfolio. ETF becomes a much more easier way to manage. You open a trading demat account, you buy it on the platform, and you can see it, track it. Tomorrow you want money, you exit out of it, and it's there available for you in that very second. The availability of funds. Tomorrow, if you feel, oh, I don't understand the market, I want to have access to my money, you can do that. Versus even if you hold real estate, a lot of people perceive real estate or gold or, you know, even bank FD. You can't get out of any of these physical assets without a loss of capital. Plus, liquidity becomes a challenge. So one of the main thing that you fear is that, oh, I need access to my money, which is what ETF genuinely provides. It provides you 100% access to your money. It's only about investing and investing smartly, which kind of leads to a very big multiplication of your money. As I was telling you earlier, the very first fund that was launched, now it's called Nippon, Nifty 50 index at that point of time, 2002. Had you invested in that, say 10,000 SIP, you know, monthly, you would be sitting at what, like about 7.5 crores, depending on the kind of return it has generated. Obviously, there were some years that had muted returns, some years that had exponential returns. But had you just stayed focused, stick to your strategy and say, okay, fine, this is the money I want to grow, and just kept investing as per your defined investment objective, you would have been sitting on a very big chunk. And that's what investing smartly or investing in a very systematic manner in the market via a managed asset, which is ETF, kind of does to your portfolio.
That's all about long-term investing, right? You've got to be patient there. Kavitha, what would your advice be to somebody who's starting new and hesitant?
So my request is, you know, just like the Nike ad, just do it. You have to start somewhere, right? And wealth, no, it's built. It's always built. We never say you don't create wealth in a day.
Yeah.
It's a process. It's a slow process, and you have to, just like health, you can't just wake up tomorrow and say, I'm the fittest of all, right? We have to work towards it. So you have to start somewhere, and you start. And start with the intention of building. Start small and build. So you buy little, you invest little, understand how the risk is playing out, understand how you react to that risk, build a diversified portfolio, take the help of an investment advisor if required, but start the process. And it's so easy now, at the click of a button, you can open a demat trading account, you can, you know, start investing. So many platforms are available. So just, it's so easy to start. There shouldn't be any reason to stop, right? So start, and start small. That gives you the courage to build and make it bigger.
Okay, so start, as you said, Nike says just do it, so you have to do that. You know, we have around 2 minutes left, so I'll give both of that to you equally. First, tell us about your journey. Were there any challenges being a women investor and, you know, actually being a registered advisor? How did it work? So please take it up and tell us more about it. Please go ahead, Kavitha. Yeah.
So I was very lucky to have very good bosses right from the beginning, right? And you know, I personally found that the journey as an investment advisor has been very, very fulfilling. And this is a gender neutral role, right? It doesn't matter whether you're a man or a woman. But in fact, women are better tuned. We understand nuances. We understand the family. We understand your aspirations. I think it's better for us. We are intuitive by nature, right?
Yeah.
So it surprises me that we have very few women advisors. But I think this is a very fulfilling career, and for women this is perfect. We fit into that role of nurturer, advisor, coach, etc.
Okay, so just do it, as you said. I remember that. Please go ahead and tell us about yours.
I think the first time I invested, so to say, was I would see my dad invest in a bunch of things. You know, he would have FD exposure, real estate, stock markets also to a certain part. And his way of teaching me was have a skin in the game. Unless and until you don't put your actual money, you're not going to learn anything. And that's something that I still till date imbibe, where unless and until I've not invested my own money, I wouldn't really learn. Now you have that advantage of investing in ETF to as low as like 100 rupees, 150 rupees. It's very lower denomination. So you don't have to have a lot of money. You don't need to have 10,000, 20,000. There's no minimum money that's required. You can have 500 rupees and start your investment journey. What happens with that? starting small especially, is that you don't have that much at stake. Plus, when that multiplies, even till a smaller, I remember I made like a 10% gain on my first 1,000 rupees that I'd borrowed from my father, and I was so happy. I was like, oh wow, I'm so rich. And that feeling kind of is just such a good, encouraging feeling. So have that skin in the game. And that's something that I've learned. You will have pluses and minuses in your portfolio, but it's how you stick through it. I think the deepest, negative fall that we have had in Nifty also taught us that had you even just stayed through it, you would have just made an absolute great return on your portfolio on the long term. So
you got to be patient and you got to have skin in the game. Is definitely a big takeaway. Ladies, it was a pleasure having both of you in the studios with us. Such an interesting topic. I wished I could have asked you more questions, but we are completely out of time. But thank you so much for tuning in today.
Thank you. Thank you.
Okay, with that, we'll take your leave on this edition of the show, but stay tuned for more news and updates.
ICICI ETF and CNBC-TV18 present Smartly Passive, unlocking the world of ETFs.